The rising interest rates has continued to cast a shadow over the Canadian real estate market, and for the 7th consecutive months, we have seen a decline in the benchmark pricing across the Fraser Valley. The number of sales has also been on a consistent decline, with the exception of the month of August since the peak of the market in March as well. Now, I want to dive into these numbers with you in more detail, but before I do that, I am going to ask you guys, if you are enjoying this content, please do me a favor and hit the subscribe button. It helps me get my content out to more people like you that want to be kept up to date with the Langley and the Fraser Valley real estate market. And after watching this video, if you guys want to book a discovery call with me, or a buyer's consultation, or a seller's consultation, there's a link below where you can book a 30-minute call with me to talk anything real estate. Okay, so what I've done for you guys is I've taken the Fraser Valley numbers for the month of January all the way up to the last recorded month, which is September, and I've gone and looked at the benchmark sale price. So this benchmark sale price is the best indicator compared to average or median sale prices that gives us an idea of the general pricing for a typical home in that area. So we can see January, we had a benchmark for all property types across the Fraser Valley at just over $1.1 million. We can see March here was the peak of the market, and we can see that along with the highest benchmark pricing, we can see the highest number of sales. And when we have a high number of sales like that, we know that that's the type of market where there is a ton of buyer demand. People are bidding on properties. There's multiple offers happening, and overall a very high seller's market, which was the case in January and February and parts of March. Fast forward to today, we can see that the number of sales and the benchmark sale prices has backed off because we've switched into a more balanced to buyer's market now. What's also interesting is that we are seeing the number of new listings that hit the market decrease as well. I personally have had a few sellers recently pull their home off the market for two reasons. The first reason being is that the benchmark price has fallen over the last 7 months, and the price point that they would sell for today just doesn't make sense for what they want to get into. The second reason being is that Bank of Canada continues to raise interest rates. They have done so since March, and if I'm a seller who needs to purchase after I sell a property, I'm most likely going to want to know what rate I'm getting into when I complete on that property and my mortgage payments start. So there's just a lot of uncertainty in the air, and for that reason, we are seeing some active listings fall off because sellers are pulling their homes from the market, and also the number of new listings has stalled because sellers don't have a good indication of where they're going and what rate they're going to get at that time. So similar to all types of homes in the Fraser Valley, I have gone out and just outlined the detached homes within the Fraser Valley to see how they compare. So here we've got only detached, and again, the trends continue. So March saw the highest benchmark pricing with the highest number of sales. September saw the lowest benchmark price point with the lowest number of sales. And for some reason, August did see a little bit of an increase there in terms of the number of sales. But I do want to remind you that the August data is taken from the July sales. So July did see a little bit of an increase in the number of sales, but other than that, everything has been on a slow decline. We've talked about how the number of sales has decreased over the last 7 months since the Bank of Canada began raising the interest rates. What's also important to note is how the number of new listings have also been affected. I found a graph done by RBC that outlines the number of sales and the number of new listings, and it compares them from today to this time last year that I would like to show you guys. So we can see here that if we look at Vancouver, the number of resales are down almost 46%, and the number of new listings are down just over 18% from this time last year. And look at the Fraser Valley, it's been hit even harder than the core city because everyone was moving out of the city during COVID. It's not extremely shocking to see that the number of sales compared to this time last year has dropped tremendously because there just aren't as many people moving out to the valley anymore. So when we think about Canadian real estate, usually Vancouver and Toronto pop into people's heads. It's not really too surprising to see them being affected the most during a transitional market. However, what was kind of interesting to me is looking at old Alberta here. Their number of sales really hasn't dropped considering how substantially everywhere else's sales has dropped. If anything, Edmonton's even up in the number of new listings by almost 4%. Alberta has more affordable housing, that's no secret, and perhaps there are people from Vancouver and Toronto that are putting their money elsewhere and looking for investment properties there where the numbers month to month actually produce some cash flow. Alberta has never been a place where you go for long-term appreciation like it has been here in BC or places like Toronto. The other area that's up as well is close was Montreal. They're up 8.2% in terms of new listings, but they're down 30.5% in terms of sales compared to this time last year. What's going to be interesting is when we hit that point in time where the Bank of Canada meets and chooses not to touch the overnight lending rate, because every time the Bank of Canada has met from March until today, they have raised the interest rate in that meeting. When we hit that point when they do not choose to raise the interest rates, I'm very interested to see how the public reacts. Are buyers going to kind of step in and say, hey, these are the rates. If I want to buy, here's what it is. Because as I talked about, we are seeing the number of listings fall back. You do reach a point where you hit a low amount of inventory, and then there's only so much for every buyer out there. So that's when the absorption rate kind of starts to pick up, and we leave the buyer or balanced market and go into more of a balance to seller market or whatever the case may be. So we're definitely in uncharted waters here. I hope you found this information to be helpful. As always, you guys can book a call with me below, a discovery call, a buyer consultation, or a seller consultation. And one last time, if you could do me a favor and hit that like or subscribe button, I really would appreciate it. These videos do take me some time to put together, so that could be your thank you. Thank you guys for tuning in. I appreciate it, and we'll talk to you soon.